Excellent. Swadika, good evening and welcome to this fireside chat on a very important topic on the importance of regulation and regulated institutions in the world of crypto. My name is Sagar Sarbhai. I lead business solutions and advisory here at Fireblocks. And just a quick word on Fireblocks. Fireblocks is a digital asset infrastructure company. We essentially remove the complexities of dealing with digital assets and Web3 as far as enterprises are concerned. As of today, we empower 1,400 plus organizations and enterprises globally, enabling them into running their digital asset and Web3 businesses successfully. Till date, we have helped organizations transfer around $3 trillion plus in assets, and more than about 12 to 15% of all blockchain transactions flow through the Fireblocks network. Today, I have the pleasure and the honor of talking to Mathias Imbach, the co-founder and group CEO of Sygnum Bank, and I am really looking forward and excited about this conversation ahead. Mathias, welcome to the session. If you could quickly introduce yourself, and then we can get on with this very, very interesting topic at hand.
Thank you, Sagar, and hi to everyone. It's a pleasure to be here and spend this half an hour with you, and hopefully I'm sure we can have a great conversation and hopefully create some nice insights for everyone. My name is Matthias, as mentioned. I'm one of the co-founders and group CEO of Sygnum. You can think of Sygnum as a digital asset crypto technology group with our own bank. We basically offer an all-in-one account approach towards digital assets encompassing crypto, stablecoins, and asset tokens built around the core of custody, trading, then asset management, lending, and the tokenization stack. And we're regulated in Switzerland and in Singapore, really kind of building what we do on the basis that future has heritage. And then if we want to work towards a future of decentralized finance, we need to also respect the heritage where we're coming from. And that also then leads to our regulated approach, etc. I personally may be interesting. I've never been a banker. I used to I used to manage a family office of an Indian industrialist. And before was with Bain and Company, advising tech companies and also in the private equity space.
Thank you, Matthias. Help us understand and walk us through your journey as a co-founder of Sygnum Bank, the vision of the company, the mission statement, and what is the problem that you are solving for as Sygnum Bank?
Yeah, it is a bit linked to my personal journey. In 2012, I started to dabble with Bitcoin. That was linked to my brother starting to build, at home, always talking about Bitcoin mining, and he's a computer scientist, and so that was kind of that first effect for me, realizing what's happening here, not so much from a financial investment standpoint, but rather the ability to transfer originals and not copies from me to you at any point in time without intermediaries. Just found that very fascinating. But it was not before then 14 when the Ethereum white paper came up. That was a time when I was investing 14, 15 for Ratan Tata, an Indian industrialist, and I got exposed to all these great entrepreneurs that would build their business model around the centralized tech stack and centralized internet infrastructure, which lends itself towards monopolizing and monetizing the end user's data. And I sort of didn't like that concept anymore. And sometimes when I also discussed with them the way kind of what their ultimate goal was, it quite frankly freaked me out a bit, kind of where the world would go if we go down that path fully. And so that was my libertarian phase that then started 15, 16, 17, went through all that ICO hype, got to know all the early, founders, etc. Also my co-founders in that journey. I tried to live without the bank account, actually. Was very difficult. And then in 17, together with my 3 other co-founders, realized that future has heritage. This whole thing was a bit detached from reality in the sense that many of the entrepreneurs could not open a bank account to pay their engineers' salaries, for example, right? And it was very much, trust was lacking. It was really seen as just a Wild West kind of bunch who's trying to do create some illusion which will never happen. And we really believed in this evolution of also financial market infrastructure, of the ability to use this technology for the benefit of everyone. But we felt we need to again, respect the heritage where we're coming from. And that's how Sygnum emerged. Sygnum is basically bridging these two worlds, and the vision is really to empower everyone everywhere to own digital assets and crypto with complete trust. So a lot what we've done is bringing trust to this industry. And I think what has happened over the last 6 months is basically underpinning that again very, very strongly, right? That actually our thesis is really playing out 100%. And probably we can go into some of the details here, but it's really happening. We need to respect the heritage in order to build the better future, also in terms of decentralization, etc. That we're all, or many probably they're also watching today, are believing in.
Yeah, no, thank you. That is really a fascinating journey, and I think safe to say Sygnum has become a very, very important organization globally as far as the crypto digital assets industry is concerned. You talked about your thesis, so just to go a little deeper into it, I mean, obviously, when Bitcoin was first, came into being, the narrative was crypto, blockchain good, crypto bad, and all the innovation was focused more on the underlying blockchain technology. Regulators and governments were very skeptical about crypto and digital assets more broadly. But over the last 2 years, we have seen favorable regulations come in, and I think there is more understanding, notwithstanding what has happened in the last 3 months, but safe to say that there is more understanding, more education. There are more regulatory frameworks in different countries across the globe. From an institutional standpoint, of course, the narrative for the last 2 years has been institutions are coming, institutions have come in. But tell us about the trends that you have seen on the institutional side. Talk to us about different use cases, the trends, the investor profiles, Web3 tokenization. Talk to us about the macro and micro trends that you are seeing in the institutional space.
Yeah, I mean, maybe picking up on what you started the question with like a few years ago, it was very common for, let's say, the gatekeepers of the institutional money to just say, Bitcoin is for crooks only, but the technology behind our blockchain technology is actually quite interesting. But it was just a way of actually saying, I really have no clue what's actually happening, but this is what everyone says, so let me just also say the same thing. Let's put it this way. And I think now, over the last 4 years, this has been a massive evolution in terms of that. There's still many reasons for institutional investors to maybe not allocate some of their assets into the space, but if you do not allocate, you have to have much more thorough understanding and reasoning in order, why you do not do it. So what I want to say with this is, it has become a lot of education and kind of, given that infrastructure is now in place much more than it was 4 years ago, I feel there's a general foundational acceptance now here that yes, this is not going anywhere. And with that, I mean crypto as an asset class, but also the Web3 infrastructure that we're still obviously very much building out is here to stay. And I feel over the last 2 years, a massive increase of acceptance of that as a fact. I think that's the big achievement. Of course, many of the use cases are still early, and we don't even know how all of them will evolve. Many are still scared to allocate, significant assets to it. That's still true today. But there's no one really questioning anymore, or very few still, that this is going anywhere. And so that is certainly a big trend that has led to, for example, in our B2B business, has led to that we now have more than 10 banks that are leveraging our technology stack with custody and sub-custody and trading end to end. These are private banks that have been around for up to 200 years. These are also retail banks with millions of clients, etc. So it's really coming, and this is not would not have been even fathomable 4 years ago. So that's one segment where we feel over the next few years there will be significant nonlinear growth for us. I'm sure. I mean, that's very much also for you guys, for Fireblocks, a key trend that I'm sure that you're following, and it's very relevant. What is interesting also, they have not been scared away with what has happened over the last 3 months, right? I'm sure those who have taken decisions, they're not stopping. Those who had not yet taken decision, they may now slow down again. That's just human nature, given what has happened over the last 3 months. So that's one segment. Second, just family offices, institutions, larger asset managers, etc. we're also seeing significant further increase of attention. And we see this flow particularly because over the last 6 months, it has become clear that counterparty and counterparty risk is so relevant, right? I mean, up until 6 months ago, when we were in the full-on hype cycle, people would often ask me, why don't you also offer 16% yield on products or things like that? And today, nobody ever asks me this question anymore, right? Today, the question is it really correct that the assets, if on Sygnum, are segregated and off balance sheet, and whatever happens to you guys as a counterparty, my assets are mine? And I can say yes. Is it correct that you did not yet have a single hard margin call on your lending book, even during these massive markets? I can say yes. And why is that? Because we have followed capital adequacy rules. We have risk frameworks in place that, by the way, we have learned from the past, right? From even in traditional finance, that a certain LTV can be linked and make sense to a certain volatility asset class or not. And all these questions are now becoming much more relevant. And particularly institutional investors, they now have a chance to invest, whereas 4 years ago, the infrastructure and the players were not really there. So I'm extremely positive midterm. Short term, given what's happening in the world, of course, it's lots of uncertainty, right? I mean, every day we're reading about another crazy inflation report, or an interest rate rise, or fears of massive recession, plus obviously war. So I don't want to say that everything is just looking great, even for our industry. And we see that lots of businesses in our industry are going out of business, bankruptcy proceedings, massive layoffs. So I don't want to say that everything is just over the next 12 months going to be easy. But we actually at Sygnum, I can say we are growing, and we on net new asset base, healthy pipeline. So I'm quite positive.
No, very insightful. And I think I would absolutely agree with all your observations and insights. I mean, we at Fireblocks are also seeing a lot of serious players now wanting to build, using this opportunity, call it crypto winter or whatever name we want to give it, but this is the real time to build. And I think this is the time when you separate the wheat from the chaff, when the real serious players come out. And I think the people who are in for the short term basically are weeded out. That being said, there will always, you alluded to it, there'll always be some concerns around institutions wanting to enter the space. And while we are all agreeing that this is the right time to build, learning our lessons from the previous crypto winters, but what would be your advice to serious players who are looking to enter into this field now, especially given I mean, to be honest, yes, while we are in the crypto winter, there has been almost a boom on Web3. Like, people are talking about Web3. I'm in India this week, and there has been a lot of buzz around Web3. A lot of institutions, be it e-commerce companies or payment providers, large banks, are entering into Web3. So what would be your advice for serious institutions looking to build and enter into this very new and exciting space? Yeah,
so I mean, first I would always ask back, what does Web3 mean, right? I mean, I feel it's obviously again also becoming a bit of a buzzword where I'm not really sure that whether everyone who so-called is getting into the space actually really knows, because it's so multifaceted, right? And so I think the first thing is to really understand the base technology and what the characteristics are of it. Because if 4 years ago, those ladies and gentlemen that talked about Bitcoin as being just for whatever terrorists, but the blockchain technology is interesting, then they would realize that if you want to deal with this technology, you need to know how you custodize an asset such as Bitcoin or Ethereum is the baseline. So I would just say, start by understanding what you will anyway need if you want to interact in any shape or form with Web3. And that is, for example, you need to know how to custodize these assets. You need to know how to get in and out between traditional finance and fiat and into digital assets. You need to know, as a reputed institution, how you deal with the associated, obviously, compliance risks, etc. But just really doing a proper analysis and trying to avoid the shortfalls that we've had, quite frankly, sometimes over the last few years, where people were focusing on doing a very quick, dirty POC or so, and then make a big announcement and never following through. So I think that hopefully does not happen anymore. Even also, as we're now talking about, metaverse, obviously the further build out of NFTs, etc. I really hope that there will be, some of these large, also existing traditional players, as they move into the space, that they follow a proper strategy, do a proper due diligence on the counterparties they're interacting with, and then really getting it right. And we see a few things, particularly also us being involved on the NFT side, and also metaverse, also two big buzzwords, I know, where I really feel also it is moving from hype to some players getting serious, really thinking it through. I'll give you a specific example. I mean, if you as a reputable luxury or whatever company with the proper governance and the CFO running the books, etc., want to get into this space, you need to think through what happens if you sell your NFTs in terms of taxes, again, obviously in terms of transaction monitoring, etc. Many of the things that last year, for example, nobody really thought about really, right, at scale, and this is now happening, and so I'm excited about what the next years will bring.
Excellent. I think we are all excited, and people who are really serious about building, I think, as I said earlier, this is a time to build and separating the wheat from the chaff, and really moving away from the hype to concrete use cases. You touched upon compliance and risk in your earlier comments, so maybe let's go a little deeper into the topic at hand, which is the importance of regulators and regulated institutions. Sygnum obviously have been at the frontier of regulatory engagement. You have received a lot of licenses globally, including more recently in Singapore, where you have extensively engaged with MAS. Talk to us about how have you seen the regulatory landscape evolve over the last 3 or 4 years? Where are we headed, especially in the aftermath of Terra Luna and all the bad news that have come out over the last 2 or 3 months? Do you think there'll be new regulations? Do you think regulators will be more circumspect? There's a conversation around stable coins. Do you think there'll be more regulations around those? Talk to us about the evolution, the past, present, and future of regulations.
Yes, in the past, there were very few regulators that really wanted to move ahead and be first movers. And I would clearly highlight Switzerland here. I mean, we received a full Swiss banking license in August 2019, which means the regulator really thought through what is the framework within which we want to have regulated serious players operate in this space. And that means we are following all the same rule as any other bank. And I sleep very well at night, every night, because I know there won't be any time in the future some regulator coming and pointing at me, you operated outside of XYZ and now I want money from you or whatever. And that is there. Switzerland was really at the forefront. Singapore was sometimes positioning itself as, yeah, we really want to go there. I would say Singapore is fast follower, but certainly not first mover. So they always want to see that others are also doing that. That's a little bit my impression. And obviously after the last few months with 3AC, 3 Arrows and Capital and also Terra, which was also incorporated in Singapore, that obviously will, I guess, leads to some tapering. I would say on we can expect quite some rigor because Singapore is a very serious, high integrity, obviously financial market. So you have these first movers, very few. Switzerland as an example, Singapore fast followers. Then you had the category of US basically fighting about 5 different bodies, regulatory bodies, fighting about who should do what and regulate what or not. This was so kind of the last few years. The scene now, they're starting to, getting to a point where they think they know who should regulate what and that really regulation is needed. And overall, we're now seeing a big trend of maybe there's a third category. The third category is trying to benefit from the hype and maybe move very fast. And there was early on, it was Gibraltar, Malta, Dubai also right now. So this is you can do that, but it's a dangerous path, personal view, right? Because I think it's important to really think through what you do also, in terms of as a country, as a location, before you then go all out. But that's maybe a third category. And we are now moving into a phase where we will see significantly increased regulatory clarity, but bundled with significantly increased regulatory scrutiny. And we're seeing so many examples led by the US right now. I mean, just recently again, right? Coinbase former employee, insider trading, SEC really going after him, and two others. So it's all over the news. So they're sending these strong signals now. It's done with the Wild West, right? And obviously the regulation will be led. I mean, they also have so many arguments, right? And you pointed out that obviously stable coins will be under massive scrutiny, plus wherever the interface to fiat comes around the VASPs and following the FATF compliance rules, we will see significant changes. I'm sometimes surprised knowing what we have to do for transfers in and out of crypto in a bank, when I see some of the exchanges with how little staff they can run massive volumes. I sometimes say jokingly, but actually with some seriousness, if we were to get anything close to that kind of flow, we would have a compliance team that is larger than your overall, stuff. So, and that's not because we want it, but just because if you want to do it properly at a certain level, after certain thresholds, there is sometimes human intervention needed to corroborate source of wealth, and making sure that funds are clean. And I think we will see a massive shift there over the next 2-3 years.
No, absolutely agree with what all that you just said. In fact, I think it is also our responsibility as the industry as a whole to come together and engage with the regulators. I mean, we don't live in a utopian world, so I think it is our responsibility to do that. And I think at Fireblocks, as one of the leaders in this space, we do take that very seriously. We engage with a lot of regulators globally. In fact, Jay Clayton, who was the former head of SEC, is on our board. So we've been engaging with the US regulators and also a lot of G20 regulators, trying to educate them and really help them draft new regulations for the betterment of the industry at large. Maybe moving towards a more positive note and futuristic, looking at the crystal ball, what is your outlook for the industry as a whole, digital assets, Web3, for the next 2 to 4 years? And maybe just to dive a little deeper, how do we as an industry come collectively together to redefine tomorrow, which really is the theme of this conference? Would love to hear from you on those two aspects.
First, I think it's really now the next 12 to 24 months are ideal to build. You mentioned it. It's now where you can see who is getting things properly done, thinking it through end to end, and how we can really touch more and more people with real use cases. And I think after this 12 to 24 months, we will see, this is my strong conviction, a massive next phase of adoption, because we need to be fair, right? So far, we have around 300 to 400 million people worldwide that are touching wallets, that are dealing with this. And we need to obviously get to a much more non-linear growth path to get this to the billions that are dealing with this and leveraging the benefits of the technology. And hence, I foresee that over the next 2 years, around, again, completion of infrastructure, clarity on what can be done and what not, how to integrate it in the daily life of people, but also significant improvements around the user experience of how we bring it to market, which, quite frankly, need to be honest, right? As an industry, we are not yet there. I will then foresee a significant adoption rate, because the overall mega trend that it just makes sense to give back some of the control of how we are dealing with our assets and what we own back to the individual, or at least the choice, is just a fundamentally good thing that I think will prevail and will happen. And use cases will ultimately be structured, and I will give a few examples, in a way that people don't even realize what the technology is behind. ticketing, ticketing, interactions between sports fans and sport clubs, etc. Just generally community management can be NFT blockchain based. People will not realize it, right? You will in the future, maybe you'll buy an NFT special NFT ticket for a soccer game, and if you bid for it, then you can have half an hour with the team before, or your son can walk into the soccer game right before the national the songs are played, etc. So these things, the combination of your digital life with then real world examples and bringing it closer to what everyone sees every day, I think will be this big next step. In addition, in the background, of course, all the significance around taking out costs, atomic swaps and settlements, so that we can significantly innovate on the securities industry. I feel there will be that moment of that breaking point in the positive, or that inflection point rather, where the older infrastructure, also in terms of how we trade public equities, etc., will be shifted to blockchain-based technology. But this is going to be a long process, but there will be that moment of no return. And that's the one we are working towards, and we should as an industry. And for that, what it requires as an industry is to have razor-sharp focus, 100% conviction that it's happening, and be able and be willing as entrepreneurs, and I do that every day, to accept that it will be for a few more years significant oscillation between euphoria and terror or fear of failure, right, until we're really where we want to be. And that is just part of the game, and I think we should enjoy the ride. And also, maybe last but not least, enjoy that we are actually not fighting for the slice in the pie, we're growing the pie. And hence a key feature of our industry should also be that we really collaborate, and even among so-called competitors or perceived competitors, that we, for many of the things, we actually work together to grow together ultimately.
I was saying thank you for those really excellent comments. And for me, really, those three words sum up the entire discussion: razor sharp focus, conviction, and collaboration as the industry. And I think if we all come together as the industry, engage with the regulators, do the right things in the right manner, we will truly be able to leverage Web3 and digital asset technologies to redefine tomorrow. Matthias, thank you very much for your time and for your insight. This was very, very valuable. Thank you, SCB 10X team, for giving us this opportunity, and for all the excellent work that you are doing as the ecosystem builder, really, both in Thailand and globally. So thank you very much. Hopefully you all had a exciting time here. Thank you very much.
Thank you.